Ever wondered why squirrels never play the stock market? Because they're nuts about saving. It's a funny question, isn't it? But it actually gives us a simple way to understand the difference between trading and investing. Consider this. A squirrel stashes away acorns not for quick profit, but for future survival. In the same way, investors put their money into ventures with an eye on long-term growth. So, if you're a squirrel, you might want to stop hoarding those nuts and start thinking about investing. Let's dive into the story of two friends, Ravi and Suresh. Ravi was a risk taker, always looking for the quickest way to grow his wealth, while Suresh, on the other hand, was more of a slow and steady wins the race kind of guy. Now Ravi was like a hare on a sugar rush. He was always on the move, buying and selling stocks like hot samosas. He'd wake up in the morning and the first thing he'd do was check the stock market. He was all about the thrill of the game, the adrenaline rush of seeing the numbers go up and down. Suresh, well, he was more like a tortoise with a retirement plan. He wasn't interested in short-term gains. He'd carefully select his stocks, invest in them, and then just wait. He'd let his investments grow over time, trusting in the power of compound interest and the stability of well-established companies. In the short run, it seemed like Ravi was winning. He'd boast about his quick profits, while Suresh would just smile and sip his chai. But as the years rolled on, Suresh's investments started to bear fruit. His portfolio grew steadily and surely, like a banyan tree taking root. So, who do you think ended up with more wealth in the end? Ravi with his quick trades or Suresh with his long-term investments? Well, while Ravi was busy riding the roller coaster of the stock market, Suresh was steadily growing his wealth over time. You see, Ravi's approach was a bit like playing a high-stakes game of poker. Sure, there were days when he hit the jackpot, but there were also days when he lost big. Meanwhile, Suresh was more like a gardener, patiently tending to his investments, watering them with regular contributions and watching them grow over time. Now, neither approach is inherently better than the other. It all comes down to your financial goals and how much risk you're willing to take on. Ravi, with his appetite for risk, might have hit a few bumps along the way, but he also had the potential for big payoffs. Suresh, on the other hand, chose the path of consistency, favoring steady growth over quick wins. In the end, it turns out that slow and steady really does win the race. Suresh, with his long-term investments, ended up with more wealth than Ravi. But don't worry, Ravi's still out there, riding the waves of the stock market, hoping to strike it rich. Who knows, maybe one day he will.